Cardano founder Charles Hoskinson speaks on the market manipulation, and another stablecoin has depegged. Could it be the next UST? This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Be sure to follow us on Twitter at AltcoinBuzzIO. And as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. And don't forget, for a limited time, our Altcoin Buzz Access group is free. And while it is, you can get our great weekly market and NFT update reports from our amazing research team. Check them out for free now. The link is in the description below. Now, let's get into the news. Bitcoin starts one of the most important macro weeks of the year in a precarious spot just below 17,000. In the next few days, the United States economic data is due, and its content and impact on economic policy will likely have a significant impact on crypto markets. As we get the latest CPI data due tomorrow, December 13th, for the month of November, it has an additional importance for the market. With 2 weeks to go until the end of this year, the chance of a risk asset Santa rally now hangs in the balance. The Federal Reserve's Federal Open Market Committee, FOMC, will decide on the rate hikes this week, and Chair Jerome Powell will deliver a speech that the market commentators will scrutinize for signs of policy change. A higher than expected CPI print and a more hawkish Fed have the potential to stop any potential rally like we saw in April and August reversals. On the other hand, another deflationary CPI print could see many chasing a continuation of the rally into the end of the year. Regardless of whether it's up or down, CPI tends to induce market volatility surrounding its release. Current consensus calls for a smaller 50 basis point hike in interest rates this month, signaling a come down for the Fed in what could be a significant turning point in policy. We'll be keeping you updated this week, so make sure you're subscribed. Binance issued a notice on Sunday acknowledging reports that a handful of altcoins were trading in an abnormal fashion on its platform. The exchange stated it would investigate the matter and take appropriate actions against suspicious accounts. CZ later declared that the price movements appeared to be just market behavior. He explained that one account deposited funds into a trading account, started buying up a certain coin, and others followed suit. However, he said that Binance did temporarily restrict accounts associated with the altcoin trading that took place, preventing them from being able to withdraw their funds. The decision was reversed after the company received lots of complaints on social media from users in various countries. CZ recognized there's such a thing as too much intervention in maintaining an exchange that operates in an industry which centers around the notion of decentralization. There's a balance to the appropriate amount of intervention, he said, adding that sometimes it's worth letting similar situations just play out. The clarification comes after one of Binance's users, who has since had their account suspended, expressed concerns that last week an API key was leaked through intermediary trading platform 3 Commas, which led them to lose funds. CoinMamba on Twitter exchanged a series of tweets with CZ over the funds that went missing. CoinMamba stated it would be nice to get a refund, but was mostly upset about the lack of prompt action. CZ replied saying it was not a situation that warranted a refund, adding that it was important for one to keep their API keys secure. 3 Commas had put out a press release on Saturday addressing questions about attacks on their platform and API keys. Post urged users impacted by the attackers to file police reports as quickly as possible so funds can be frozen and potentially recovered. On Sunday, 3 Commas also posted a statement on Twitter that claimed false rumors were being spread online by bad faith actors, which accused the platform of leaking users' API keys. 3 Commas said the rumors were related to fake screenshots. So if you have any intermediary API with your trading, make sure that your keys are secure. Sam Bankman-Fried, the former CEO of the insolvent cryptocurrency exchange FTX, has expressed interest in launching a new business to recover the money he owes to his clients, saying, "I would give anything to be able to do that, and I'm going to try if I can." Bankman-Fried's exchange may have more than 1 million creditors, according to bankruptcy filings from November 14th. Estimates on how much FTX has potentially lost range from 10 to 50 billion. Meanwhile, after days of back and forth between United States House Representative Maxine Waters and Bankman-Fried, the FTX founder is now officially confirmed as a witness for the December 13th hearing with the House Committee on Financial Services. His name now officially shows up on the list of witnesses scheduled to attend the December 13th hearing, titled Investigating the Collapse of FTX, Part 1. Over the weekend, news broke that The Block, a crypto news site, had secretly taken loans from Sam Bankman-Fried. The Block CEO, Michael McCaffrey, immediately resigned after the loans came to light and will also be stepping down from the Block's board. The company said no one at the company had any knowledge of the loans except for McCaffrey. McCaffrey received 3 loans for a total of $43 million from 2021 through this year. The first loan was for $12 million in 2021 to buy out other investors in the media company, at which time McCaffrey took over as CEO. The second was for $15 million in January to fund day-to-day operations, and the third was for $16 million earlier this year for McCaffrey to purchase personal real estate in the Bahamas. McCaffrey said, "I didn't disclose the loans to anyone. No one at the Block knew anything about the financial arrangement between my holding company and Sam Bankman-Fried. including the editorial and research teams, saying that he thought the knowledge of the loans might be seen to compromise the objectivity of the coverage of Sam and his related entities. While he said, "I've never attempted to influence coverage of FTX, Alameda, or Sam," others, like Cardano founder Charles Hoskinson, disagree. Cardano founder Charles Hoskinson hosted an AMA this weekend where he covered a lot of topics for over 2 hours. He starts the live stream talking about why Cardano has always gotten bad press and hate over the years, and how the block has been secretly funded by Sam Bankman-Fried.
Why is it that ADA, Cardano, you guys are so viciously, vehemently criticized? So much programming in the industry. And then we discover the block, which has given us such lovely coverage through the years. It turns out that the CEO is taking bribes from FTX. Turns out that FTX was trying to pay everybody off to boost their garbage and attack legitimate projects. And that's the tip of the iceberg. And now all the dirty laundry is coming on out. People are starting to learn about it. People are starting to see what we've known, what we suspected for years.
Following this, Charles says Solana should become a sidechain of Cardano.
By the way, sidechains are an interesting thing. So I'm saying, hey, Solana, come be a sidechain. And it's tongue-in-cheek for a bit, but at the same time, I'm being a bit serious. Sidechain's model of Cardano is that if a sidechain comes in and connects to Cardano, that sidechain is a partner of the main chain. The main chain provides security, it provides infrastructure, it provides an ecosystem, and it provides liquidity. So you could take Solana, replace the current consensus algorithm with something 25 times faster and doesn't collapse all the time, make it a Cardano sidechain. Solana would then be paid to ADA holders to maintain it, probably at a lower inflation rate than they're currently paying right now. They don't have to worry about security anymore. And then all those dApps move over and they get better reliability and security, and they get faster. And every ADA holder benefits, every Solana holder benefits. That's called a partnership.
Solana, which has taken a massive hit this month, being one of the largest projects held by Alameda and FTX, saw a 70% decrease in its price and total value lock. When asked if Cardano would ever have issues with the SEC, Charles says they've never done anything to be considered a security and are very decentralized. He follows that by saying he's heard rumors that the Ripple case could be settled as early as December 15th, which is this Thursday. And if it does, it will have catastrophic implications for the industry, whichever way it goes. The Tron Network algorithmic stablecoin USDD has fallen to 97 cents, depegging from $1. The stablecoin, championed by Tron founder Justin Sun and managed by Tron's DAO, fell to just under 97 cents, hitting the lowest since June 22nd. The decline violated the DAO's 3% price fluctuation threshold for price fluctuations to be considered DEPEGs. USDD's prolonged depegging is accompanied by a steady increase in the stablecoin's dominance rate in the USDD 3CRV liquidity pool based on the decentralized exchange curve. USDD accounted for 86% of the total liquidity of 34.5 million, up from 80% on November 10th. The heavy imbalance suggests users are increasingly swapping USDD for the pool's other stablecoins like DAI, USDC, and USDT. In an attempt to calm market nerves, Justin Sun announced on Twitter that he is deploying more capital to defend USDD, while stressing that the algorithmic stablecoin has a collateral ratio of 200%. USDD's inability to regain the peg has many wondering whether the dollar-pegged coin, modeled after Terra's algorithmic stablecoin UST, is the next thing to go down. What do you guys think will happen to USDD? That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.